Welcome back to the Property Playbook. We're your hosts, Elena Sarditas
and Erica Reddy-Chiquette.
And we're going to talk about all things mortgage interest rates today. We have a fabulous guest with us, Elan from Mortgage Outlet. He is the co-founder, and Bank of Canada announcement is coming up around the corner. What do you think is going to happen?
I think absolutely nothing is going to happen. I'm going to give you a little bit of a longer answer, but there's a lot of experts in the mortgage field. And if I rewind a couple years ago, all of the experts, whether they were chief economists or the Bank of Canada governor or the media or the news, whatever it is, were saying, go variable, it's all good. Rates are going to be low for a long, long time. And everyone got it wrong. 6 months ago, 4 months ago, even 2 months ago, they were saying rates are going to drop, rates are going to drop. But even in the last couple of weeks, there's been more like, inflation is a little bit higher than expected. And things are a little bit, we're going to lower rates in January. No, maybe we'll lower rates in March. Well, maybe we'll lower rates in the summer. So really, they keep kicking the can of lowering rates. And I really don't think anything is going to happen in March.
I am on your bandwagon, to be honest. Everybody says to me, when do you think? I'm going to go out there and maybe be a very unpopular person right now. I think the fall.
Oh, that's bold.
I know.
But I actually think...
I don't like being controversial.
Well,
I don't like being controversial. I mean,
but you got to tell it like it is, right?
Cheery, but
Yeah.
I genuinely, so many clients are sitting down with me kind of being like, okay, March, let's hinge on March. Okay, we're looking at Instagram and we see these floodgates opening and the buyers running and absolute mayhem and it's going to happen and the spring market has to launch and da-da-da-da-da. And I go,
Okay, but can I ask why? Why do they care about what the interest rates are going to be by the time they buy? Because even if they buy, when interest rates go down by what, a quarter point?
Sure.
What difference is it going to make? The purchase price is going to go up a bit. They're going to have to put more money down. And eventually, we all know interest rates will eventually come down. We just don't know when. And when the interest rates come down, your property is now going to be worth more.
see, I think though,
Right.
people are so tied to this interest rate. This notion of the interest rate is the signal that it is go time. It is go time because the Bank of Canada is saying, buyers, this is the optimism you need. And it's also Bank of Canada saying, sellers, this is when you make your money. I think that's why this interest rate is just so tied to both buyers and sellers. And they're
Yeah.
dying for this to happen.
Well,
I'm just going to say it.
Yeah.
Go time is now. There is no
Agreed.
go time
Agreed.
is now. There is never going to be a point in time where it wasn't a better idea for you to buy yesterday. Go time is now. When they lower the interest rates and there is a floodgate opened and every single person
100%.
and their mom are lining up in front of your property and want to put in an offer and you're a buyer, what is your agent going to say? Your agent's going to tell you either overpay today or way overpay tomorrow. That is the conversation. Now we're in the driver's seat. You want to bring an offer to the table? There's very, very little inventory, but we do have some cards. We are not buying or competing with insane pricing negotiations. We're literally looking at statistics. How much is this property worth? How much do you want to offer on it? How much does it mean to you? That is it. And if you buy the property and you love the property, great, hold it. You're not flipping in a month. You're not flipping in 2 months. Who cares what the interest rates are going to be? But my question is this, are you going fixed or variable right now?
So today I would go fixed, and just to put some color, most of my clients and most Canadians are opting for the 3-year fixed rate. And I call it the Goldilocks of rates. So it's like, it's not too long, it's not too short. Some people inquire about 5 years. I'm not a big fan of 5 years because rates are supposed to come down. But point in time today, a 3-year rate might be around 4.99 or 5.29%, but a variable rate might be 6.5%. So it's quite a bit higher to go variable because the prime rate of Canada today is 7.2%. So let's just say you get prime minus 0.7, that's 6.5. Well, if you get 4.99, you're saving 1.5% today. Now, I'm going to get a little nerdy, but if you look at the time value of money, the present value of money, or simplified, $1 today versus $1 in 3 years, I would rather save $1 today than save $1 3 years from now. So if you're starting a mortgage today and your rate is 4.99, or you start a mortgage today and your rate is 6.5, and it goes to 6, and it goes to 5.5, and it goes to 5, and it goes to 4.5, that's a lot of losses you're getting, and many, many months and years until you actually get your payback. So long story short, today, I would probably go with a 3-year.
And I love the analogy of Goldilocks because I really, to me, that kind of is, okay, you're kind of getting it all. That sounds like that 3-year kind of gives you, You're not overexposing, you're not underexposing, you're probably coming out hopefully ahead, but it's not too extreme. It's not too, too terrifying.
Yeah, and I'm gonna get more nerdy and technical, but imagine you're, typical buyer in the GTA. You really want to have the biggest mortgage approval possible. Well, the stress test is based on your rate. So if your rate is 499 and then you add 2% for the stress test, you're stress testing at 699. So you can borrow money according to 699. But if you're taking a variable rate at 6.5, you're now stressing at 8.5, meaning you can actually borrow less money with the variable rate, and your monthly payment will be a lot higher with a variable rate, which most people are concerned about their monthly cash flow.
We might need to even recoin Goldilocks. This sounds better than Goldilocks.
Well, yeah, there you go.
What I do want you to touch on, though, is what is the difference between variable and fixed, just so people understand, because let's do like a high-level conversation where we talk about what is the difference, because we don't know what our listeners are.
Yeah, absolutely. And you guys are painting me into the nerd zone here, but that's okay. Fixed is very simple. You have a rate for 3 years, 5 years, 2 years, whatever it is, even 10 years, which I never recommend, and that's a separate story. But you have a fixed rate. Your monthly payment is $3,000 a month. You pay for 3 years. After 3 years, you win the lottery. You can pay it off. You can sell the house. You can do whatever you want. Very simple, 3 years fixed. Now, variable, there's two kinds of variable rates, which a lot of Canadians learned the hard way. And I'm going to use real-world examples to illustrate. But Scotiabank has what's called an adjustable rate mortgage, which is a variable rate style of mortgage. And generally, variable rates are based on the prime rate of Canada. And then usually there's a discount. So prime -1, prime -0.5, whatever the rates are of the day. Now, the way Scotiabank works is, if I rewind a couple years ago, it's an adjustable rate mortgage. Your monthly payment is $2,000 a month. Bank of Canada raises rates. Scotia mails you, hey, your monthly payment is now $2,200. They raise rates again. Your monthly payment is $2,400. They raise rates again. So there were, and not to pick on it, but that's just their style of mortgage, that their monthly payments went up and up and up and up and up. To contrast that, there's a variable rate mortgage called a variable rate mortgage, i.e. not adjustable. And that's like TD and RBC, and most of the lenders use that format. And if your payment is $2,000 a month, basically, let's say $1,000 is interest and $1,000 is principal. If rates go up, $1,200 is interest and $800 is principal, but your monthly payment stays at $2,000 a month, which frankly, for most Canadians, it manages their cash flow because they like to have that stable cash flow of $2,000 a month.
Do you know where I'm going? Unless you hit trigger rate.
There's the trigger rate and the trigger point, which I'm not going to go into too much, but very simply, eventually, if your rate gets too high, the bank will say, well, we know your monthly payment was $2,000 a month. Rates have gone up so much. Now your monthly payment is $2,200 and $2,400. So even variable rate clients with banks that offer variable rates, they've had their rates increase as well.
Okay, I think my last question probably would be
last. I'm shocked.
Yeah, no, you
I should not.
I want to talk about one thing that you brought up. I'm going to kind of highlight it a bit differently, but I'm a contrarian, and I like kind of do what the opposite of people are doing. And I love the Warren Buffett quote: "Be greedy when others are fearful, and be fearful when others are greedy." So in October, November, December of 2023, the market was really cold. And I thought it was an incredible time to buy because no one wanted to touch real estate. Why? Because 3-year rates were 6.3. Now, if you could buy it at that time when everyone is scared and the seller is negotiating, that's an amazing time to buy. Now, you're going to have a higher rate for 3 years. You're going to pay a little bit too much interest, but you're saving a ton of money. If you wait, and this is kind of what you were saying, if you wait till the Bank of Canada starts opening the floodgates, all of a sudden, there's 14 offers. So why would you want to wait even today? Why would you want to wait for rates to start coming down when you could buy today? Maybe there's 1 to 3 offers, but if the Bank of Canada says, okay, we've waited long enough, the pain is over, rates are going to start coming down, now you're competing with 14 people, like I would way rather buy when everyone else is scared.
And I think to your point, this is what I say to a lot of my clients. Most people want to be like most people. It's really
100%.
tying into that quote of yours. And I think
it's Warren Buffett's quote, but I'll take credit. Thank you. That's right.
We'll give Warren Buffett the credit. But I think the really important thing is, at the end of the day, most people want to be like most people. There's a huge herd mentality. Yeah. So the Bank of Canada is that herd mentality. Where they move and what they do drives the herd and the direction. And so I think it is, to your point, important to not follow the herd, to not be like most people.
That's right.
And that's where you have success in the market.
Yeah. And then the other thing that I would kind of move forward with as well is, I don't actually think the interesting question is whether rates fall in March. It's the question is, how much do they fall and how quickly do they fall? Because there are a lot of experts that are predicting that rates will plummet. And they're just going to, it's kind of like we've had all this pain building up, layoffs, recession, whatever, uncertainty, and then things just slow down. And then the Bank of Canada potentially just drops rates. So it's not, do they do it in March or this or that? It's what do they signal and how quickly do they lower rates? And that's really where it can get interesting.
So let's talk about that. What do we think that is going to look like? I know none of us hold a crystal ball. We're going to try to. Do we think we're talking plummet? Do we think we're talking, I would say stable rates decreases?
I think if you're a buyer, do not gamble on what they're going to do. If you're a buyer, get in. Get in now before this happens, because either way, you're going to be at a loss. Whether they go slowly down or whether they start plummeting down, you're going to lose a race that's already started ahead of you. So get in now. That's the conclusion. And I'm not just saying that because I'm a real estate agent. I'm saying that because I actually believe this. I believe that the best time to buy is actually when interest rates are a little bit higher and there's less people buying it.
That's right.
Because I'm putting less money down. My deposit's going to be, I'm putting more money. I've lost my train of thought. I'm putting less money down because 20% on $1 million
That's right.
is a lot cheaper than 20% on 1.5. So why wouldn't I buy with a little bit higher of an interest rate, knowing that eventually things will change, interest rates will come down, my property is now going to be worth a lot more money. I'm going to go ahead and call Elan and say, refinance my property now with a lower interest rate. I'm going to grab the lower interest rate, I'm going to pull money out of that property, and I'm going to go buy more. That is my plan. And I don't know if you agree, disagree. I'm happy to...
I agree. I think the other lens that I would add on to that is, if I like to rewind to, let's say, April of 2023, and the house was $1 million and interest rates were lower, maybe April 2022. Now that $1 million property, especially in more of the outskirts and suburbs, might be $800,000. And it's you're saving $200,000. Now, you're paying $20,000 more in interest over 3 years. Who cares? You're saving $200,000 with more upside. And guess what? You're not begging the sellers. Please, Mr. Seller, please, Mrs. Seller, I will waive my inspection, waive my financing, and my clients fell in love with your home and they will raise a family, and here's my video. You're not begging them. Now you're actually negotiating. But I think when you change the context of 14 offers begging the seller $1 million versus negotiate 800, 900,000, slightly higher rates, I actually think that context makes a big deal. Again, obviously, you're buying real estate for the medium and long run, and you can sustain, higher rates, lower rates, but you're in it for the long run.
Absolutely. I mean, I think two big things there. Long run, which I know we've talked about in many episodes and we'll always talk about. The time horizon is so important, but also that ties back to that whole conversation we were having about the herd mentality, right? It's getting off the wagon that everybody is on, getting off that fear train and going, now's my opportunity. And to touch back to your numbers, those are staggering. Let's talk about that for a second. Yeah. $20,000 for potentially $200,000 in a profit margin. Yeah. I mean, you put that in a very simple, line to line item. I don't know who would say no to that.
Yeah. Well, again, but it's the herd mentality. Everyone is scared. Market was extremely cool in, October to December, and January flipped, fixed rates, 3-year rates started coming down, and the market has started to pick up right away.
And I do think smart money has re-entered the market. People that know what's going on, that have gone through this a couple times in their lifetime, know exactly what's happening and are buying now. I have buyers right now that are looking, and they're aggressively trying to buy before the Bank of Canada makes any announcements. Because regardless, if they go up, if they pause, if they go down, if they whatever, they're we don't care. We want to buy now because we see that we're close to the end of the tunnel, and we want to get in before everyone else and their mom decides to get in.
And sorry, you go ahead.
Well, I was going to say on that point, I do want to promote myself, but I actually want to be sincere, which is I have this saying, which is real estate moves very, very slowly until it moves very, very quickly. And what I mean by that is, some people, they're looking around, they're not sure. They might look at many properties, then take a couple weeks off, then go to an open house, then whatever. And then I get a call Thursday at 7 p.m. Elan, I know I was going to do my pre-approval with you, but I found this place and I wasn't expecting to, and now I need my full pre-approval in the next 2 hours. So the reason it can take weeks and months to find a place, but when you find it, you have potentially minutes or hours to get your shit organized. So I do recommend, and whether it's with me, and I hope it's with me, or your mortgage professional, your bank, get your stuff organized and ready to go. Take a look at the market, because a lot of times real estate happens when you're least expecting it. And it's like, oh, we kind of put off our home search, but we drove by this open house and it was so cute. Or my realtor, emailed us and it's like the perfect place. And now we got to move quickly. So to me, that's that big thing, is like, be proactive, be ready to go. And if you don't need it, you don't need it, but you're ready to pull the trigger. To me, that's a very important thing in this market, because it is hard to find a great place. And if you're ready to go, then you're going to have the leverage when you're negotiating, especially with other unprepared buyers.
I mean, in my opinion, you need to have your ducks in a row.
Yeah.
You should not be getting in a car to look at a house if every single duck is not lined up.
And
that is, in my opinion, one of the most important ducklings, if we want to call it that.
Yeah.
First, get pre-approved.
Yeah.
Well, and again, I'm gonna say here, very important, pre-approved. Pre-approved is a marketing word. It means nothing. There's no such thing as a pre-approval. So when you talk with your mortgage professional, what is a pre-approval? It's a rate hold. It's a confirmation of your income. It's an understanding of your situation and goals and needs. So the key word that I would highlight to all buyers, whether they're first-time buyers or investors or new to Canada or whatever, is documents. If your mortgage professional is not asking you for a zillion documents, you are not working with the right one. If you needed, my famous example, if you needed knee surgery and you walked into your surgeon's office and the surgeon said, get on the table, I'm going to start cutting you open, would you trust that surgeon? A good surgeon needs an X-ray, MRI, CAT scan, EKG, blood pressure, everything before they start. And similarly, a good mortgage professional, is your down payment in Bitcoin? Do you have a side gig? Did you get a commission or bonus? Did you co-sign for your sister's car loan? Did you go to the United States for college? They need to know everything about you so that you don't get tripped up along the process. But the one word to summarize, documents, not pre-approval, documents.
And I think too, with the pre-approval, that's so important. I always say, when I chat with a buyer and they go, I've been pre-approved for XYZ amount. I go, okay, great. Let's just talk about what you're comfortable with. What can you afford?
Right.
Because a pre-approval, I think, to kind of expand on that, is sometimes people are like, oh my goodness, the bank has approved me for this.
Yeah.
And you're like, whoa, slow down.
I get the opposite.
No, I would say that's the outlier for sure.
What does that let you afford? And sometimes I think that goes back to your point about professionals, because there's this notion of like, oh my gosh, the bank's going to lend me this. Let's go shopping. No.
So I don't get that one. I wish I got that one. No, I get the opposite. That's
more rare. Give me more. Give me.
I qualified for $1 million, hypothetical, but I want to shop for 800, and they don't tell me they qualify for $1 million.
Right.
So it's me being like, are you sure? Like, what did the bank actually tell you? Because there is a big difference between an $800,000 property and $1 million property, and the bank pre-insulates you. So do you know that? Why are you insulating?
Well, that's the stress test. That's exactly right. Yeah.
Well, see, I tend to get that this is what they've gone to, but this is where I'm comfortable, and I don't want to go there. I want to be here. And I congratulate those people, because I think sometimes people get too carried away with what the bank is willing to lend them or pre-approve them for.
That's fine, but you also have to remember, what is 100,000 in the grand scheme of things? It depends. Your dream home versus not your dream home. 20K is really the difference. For 20K, would you rather have your dream home that is bigger, that you won't outgrow in the next 2 to 3 years, versus the home that you will outgrow?
But then this also goes back, I think, to education, which what does $20,000 more on your mortgage mean? And to your point, $20,000 might be one less dinner out. Okay, perfect. Yeah, I can do that for my dream home. But maybe $100,000 is a very uncomfortable zone that puts me in. So I think it's options, it's education, it's pre-approval, it's professionals, it's working with the right professionals.
So I'm going to come back to it because me and Elan have been, I would say, good friends for years now. And we do a lot of transactions together. And I can say there's a huge difference between the mortgage broker and the agent working together versus when they don't know each other and don't work together. So if you choose to use people that don't know each other, introduce them. They need to work as a team. We are all a team for you.
1,000%.
Yeah.
Truer words were never.
And one thing I learned along the way, and maybe this is obvious, is part of the value that a top realtor brings is not just them, it's the suite of professionals that have met their standards. So it's like, I know my lawyer's on the ball. I know my stager's on the ball. I know my photographer's on the ball. I know my mover's on the ball. I know my handyman, whatever, is on the ball. That's part of the value that a good realtor brings, as opposed to a part-time person or a new person. And they're like, I don't know, I just Googled the guy and like they're going to show up. But a top realtor has a standard and everyone in their network meets that standard as well. And that's critical.
I'm going to actually talk about a little bit about how me and Elan actually met. I called my lawyer, which for those of you who know me, they know I absolutely love my lawyer. He is fantastic, Jonathan Hacohen. I
Shout out.
him. Yeah, I had to shout him out because he's going to comment on this. I had a conversation with him basically saying, I am sick and tired of mortgage brokers. I fully had this conversation. I said, I cannot believe that they dropped the ball and now I have to carry the weight. And like now I need to get them a second or third opinion. Like I need an all-star mortgage broker because we are going to lose if I don't have someone fantastic on the team. And he goes, I have the perfect person for you. You two can annoy each other at 4 a.m.
Big time.
Like when he says he is the person that asks for all the documents, that's not an understatement. I've had clients call me and be like, well, why does he want to know everything about my life? And I go, he is asking you this because when we go to that offer table and I say we need to get to here, if we call Elan and say we need to get to here, he's going to tell us we can or we can't.
And that's
you need
That's
it.
for sure.
Especially in the market that we will enter into, where we will be competing again, or we are already competing now because of the lack of inventory. You need someone on your team that has all your information, that does not put you in a situation where you bought a house, you went in firm, you didn't have any conditions, and now you actually don't have financing.
Or you spend all this time looking for a property, you buy a property conditional on financing, then you set in the docs, and in 5 minutes, I'm like, yeah, nothing is going to happen, like walk away. Like what a waste of everybody's time.
So you know my feelings about mortgage broker versus bank. I like working with a mortgage broker. I don't know how you...
I'm going to say.
And the reason why I like it is because if I call them at 3 a.m. and say, I'm putting in an offer right now, who's going to...
3 a.m. I mean, come on.
Like 11, we're hypothetical here. 10 o'clock at night, 7 o'clock at night. Who's going to answer me? Is it the bank person or is it the mortgage broker? Now, sometimes maybe that bank person goes above and beyond and we have their social number and we can figure it out. But 9 times out of 10, if I call the mortgage broker on the file, they're answering.
Well, real estate, let's not forget, typically, not 3 a.m., everybody, it's typically an after-hours gig. It's not a 9-to-5 job. It's not a 9-to-5 market. Offers happen in the evening, on the weekends. At the times you least expect them to happen, they unfold. So I think you're right. I mean, both of you, the team is critical and the team functioning, as you put it earlier, I think it's so accurate at the standard is paramount for success.
So this is going to be my final-ish question. What is the difference between going to a mortgage broker versus going to a bank?
So I have a famous analogy for this. I use a lot of analogies, but when you go to your bank, like that's okay. And it's kind of like walking into a BMW dealership and you're going to get a good car. You're going to get, a fair price. But they're not going to tell you that Audi is on sale. And they're not going to tell you that Mercedes has an extended warranty. And they're not even going to tell you, wait a minute, you have 4 kids in a carpool. What about a minivan? Or that you have a cottage and you should buy a Jeep or a pickup truck. They only sell you one product, whereas a mortgage broker, especially a good mortgage broker, again, there's a saying in the industry, KYC, which is know your client. I have an expression which is FKYC, which is not sort of a vulgar word. It's flawlessly know your client. And I need to flawlessly understand my client. Because what are you doing today? What are you doing next year? Are you renovating? Are you buying your kids like a wedding gift? Or are you giving them the bank of mom? I need to flawlessly know my client so I can tell you, you know what? You came in here for a BMW, which is okay, but you actually might want to consider a minivan with winter tires that has a plug-in hybrid engine based on your needs. And they're like, I didn't know that existed. It's like, yeah, because that's not your job. It's my job to tell you that. But again, if you walk into your bank, you're only getting one product, one rate. Maybe one bank will lend you 200,000 more. Maybe one bank will give you a lower rate. So I'm actually pretty passionate about it. And I think it's a very important part of a mortgage broker, is that aspect. So
I love that analogy. But I mean, the only thing that I've got to say is I don't know how glamorous selling someone a minivan with snow tires is.
But if that's what they want, but again, I say, imagine you got carpool and I sell you a Ferrari and 2 days later, you're going to call me and say, hey, Elan, like, what's this Ferrari? Like, my carpool is today, right? So you really do. Like, I actually take it very personally, but like, really, what are you trying to accomplish? And a lot of times people have the wrong idea. Hey, Elan, I want a line of credit. I want this, I want that. And, certainly we will listen. It's the same. My thing is, my role is to explain and the client's role is to decide. You might have a client, a married couple, they're expecting triplets. You show them a beautiful house in the suburbs with a yard and a great school. And you're like, I recommend this. And they're like, cool, but I want the 700 square foot, like, sexy loft. It's their decision. You've highlighted the advantages and disadvantages, but it's their decision and they're making an informed decision. That's how I see my role, is really making sure that you understand all the different options. And it's like, hey, I told you the loft might not be great for raising a young family, but it's super sexy. So good luck to you.
Okay. I'll give you the minivan and the snow tires.
Okay.
Well, thank you so much for joining us. I know mortgages are not the sexiest topic.
Oh, I could talk about mortgages for a long time.
I know you can. We've talked about
Yes.
a long time. Once again, thank you everyone for joining us on Property Playbook. We're your hosts, Elena Sarditas
And Erica Reddy-Chiquette.
and we can't wait for you to join us next week.